Okay, so global markets are kind of, well, they're really taking a hit right now. And a lot of people are pointing to President Trump's tariffs as the trigger for all of this. We're talking like a massive amount of money wiped off the major markets, over $10 trillion, which, it's kind of drawing some comparisons to the whole COVID crisis back in 2020. And it really feels like everybody's just kind of selling everything right now. If we look at Wall Street specifically, the S&P 500 had a really rough couple of days, dropped more than 10% in just the last two trading days of last week, which is, well, it's actually the worst we've seen since World War II ended. And we're talking numbers comparable to the 87 crash, the 2008 financial crisis, and even that initial shock when COVID first hit. And things aren't exactly looking up just yet. Even after a pretty volatile trading day on Monday, the S&P 500 still ended down another 1.3%. So some analysts they're saying this might not be over yet. Kevin Fawcett from Comingat, for example, he's predicting even more declines in U.S. stocks. And he's also expecting that borrowing costs for companies they're probably going to go up. The thinking here is that these big losses in the stock market are going to hit U.S. households where it hurts, like directly impact their wealth, which could then lead to people cutting back on spending. And, that could obviously hurt economic growth overall. And, we have to remember that a lot of U.S. households have a significant portion of their wealth invested in stocks. I mean, it was at a record high at the end of 2024. And the worry is that because savings rates aren't that high, there's this really tight connection between how well the U.S. economy does and how the stock market is performing. And you can really see the nervousness in the market if you look at the VIX indexing. It's sometimes called the fear gauge of Wall Street. And it's at its highest point since that global sell-off back in August. On Friday, it rose above 45, which hasn't happened since the COVID crisis in 2020. And get this, it also saw its biggest single-day jump since then too. Well, there's some more story in Europe too. The Euro-STOXX Volatility Index, which is kind of their going to the VIX, it's also looking pretty shaky. It's actually on track for its biggest single-day increase since October 2008. So if we look at specific sectors, it feels like banking stocks around the world they're really feeling the brunt of the sell-off. European and Japanese banking stocks, for example, have lost something like 20% of their value in just the last 3 trading days. And even in Europe, where there was, some initial optimism after Germany announced its fiscal stimulus plan, banking stocks still ended up dropping 15% over those 3 days, which is their biggest fall since the pandemic hit. It seems like the growing fear of a recession is leading to expectations that major central banks are going to have to cut interest rates faster. And that's, generally not a good sign for bank profits. And this whole idea of slower global growth, it's having a ripple effect on the oil market too, because, if the economy slows down, the demand for oil is probably going to go down as well, right? So Brent crude oil has already fallen by 2%, and it's now at its lowest price since April 2021. Overall, oil has lost about 15% of its value over the same 3 trading days, which is it's the biggest 3-day drop we've seen since the previous crisis. The Australian dollar has also taken a pretty big hit, even though Australia's exports to the US are only facing a 10% tariff, which is, it's actually less than the 34% tariff on goods from China. A lot of investors use the Australian dollar as a kind of like a proxy for the Chinese yuan, which is, it's less liquid, but because Australia and China have such close economic ties, it's often seen as a way to gauge sentiment about the Chinese economy. So after Trump announced the tariffs and then, China retaliated, the Australian dollar fell about 4%. And what's really interesting is that it dropped 4.5% in just the last 2 days alone, which makes it the biggest 2-day fall since that 6% drop back in 2020 and actually the biggest drop we've seen since 2010. Vietnam's markets are also feeling the pressure. They're a major player in what's called Factory Asia, and they export a lot of goods to the US. But now the US has slapped a pretty hefty 46% tax on imports from Vietnam. To put that in perspective, Vietnam's trade surplus with the US reached a record high of over $123 billion in 2024, which is a 20% increase from the year before. So as a result, the local stock market has taken a downturn. And Vietnamese dong, the currency they use for exports like coffee and sportswear, has also weakened. It's actually fallen to an all-time low, and it's now trading about 5% below its 7-month high from last September. And while weaker currency can make exports cheaper, it's not clear if that will be enough to offset the impact of those high U.S. tariffs. We're also seeing a lot of selling pressure on government bonds in a lot of developing countries, what are sometimes called frontier markets. Pakistan's bonds, for instance, which are heavily tied to their textile exports to the U.S., have fallen by 13 cents. That's actually pushed some of their debt below 70 cents on the dollar, which is Well, it's a level that's often seen as a sign of financial distress. Sure-like bonds, which, they just went through restructuring, have also been hit pretty hard because of these tariffs. And even oil exporting countries like Angola haven't been spared. This whole situation could make it much more expensive for these countries to borrow money, which would obviously have a negative impact on their economic outlook. President Trump's tariffs have definitely raised concerns about a much wider global trade war. And, the markets haven't exactly been calmed by the mixed messages coming out about the tariffs. On Truth Social, Trump said that countries from all over the world are talking to us and that tough but fair parameters are being set. But then, almost right after that, he threatened to add another 50% tariff if China doesn't back down from its retaliatory tariff, which means, if that would have happened, the total U.S. tariffs on some goods could reach as high as 104%. Rick Kenwell, an analyst at Editorial, pointed out that this uncertainty around the tariffs is a big part of why the markets are so volatile right now. And Ivan Feinseth from Tigris Financial, he suggested that the tariffs could actually lead to slower economic growth, higher inflation, and might even force the Federal Reserve to keep interest rates right where they are. While there was a brief moment where markets reacted positively to some news about the tariffs, which kind of suggests that investors are really hoping for some kind of easing of the trade tension. The markets, they ultimately continue their downward trend on Monday. Speaking on Air Force One, President Trump actually addressed the market turmoil and the concerns about a recession. He said the U.S. economy was strong and that eventually it would become the most dominant economy in the world. He also said that other countries had, he said they had taken advantage of the U.S. in the past because of what he called stupid leadership, and that sometimes you have to take medicine to fix things. Now, U.S. markets had a really, really rough day on Friday. The Dow Jones dropped 5.5%, the S&P 500 fell 6%, and the Nasdaq plunged 5.8%, which actually pushed it into a bear market. Friday's drop was the worst day for U.S. stocks since 2020, and Thursday was actually the second worst day since then too. But the U-tide hasn't been limited to the U.S. Asian and European markets have also seen some pretty steep declines. Hong Kong FANG Index, for instance, it plummeted by 13.22%, which was its worst single-day performance since the Asia financial crisis back in 1997. Tokyo's Nikkei 225 index fell about 1%. Taiwan's TAIEX dropped 9.7%. Singapore's STI was down over 8%, and South Korea's KIL SPI index fell over 5.5%. Australia's S&P/ASX 200 index also saw a decline of more than 6%. And in mainland China, the Shanghai Composite Index was down by over 7%. Indian stock markets also had a tough time, with the Sensex falling 5.19% and the Nifty dropping 5%. Taken together, Asian markets actually recorded their worst daily trading session since the 2008 global financial crisis. And European markets followed suit, with the UK's FTSE 100 down 6%, the Pan-European Stock 600 down more than 6%, Germany's DAX down 10%, France's CAC down 6.6%, and Italy's FTSE MIB down 5.7%. Even the cryptocurrency markets weren't immune to all this global market anxiety. During Monday's sell-off, Bitcoin fell by 0.9%, Ether dropped 3.4%, and Solana fell 1.1%. Bitcoin's price is currently sitting around $79,000, which is about 30% lower than its peak back in January. So there you have it, a quick rundown of the current state of turmoil in the global markets. And, it's really all stemming from the introduction of these tariffs and, the threat of even more tariffs to come. The fact that the market reaction has been so strong with people comparing it to some of the biggest economic crises in history really underscores the deep concern about the potential economic fallout from these trade policies. If you found this overview helpful, please consider liking and subscribing for more insights into the complex world of global finance. Thanks for listening.